Hi, Alessio. Hope you're well. In this video, I want to take a look at the chart of the stock markets here, especially this recent breakout and rally we're seeing here on the S&P, especially after the elections. And I want to explain to you the significance of these charts, for example, here and this chart you're seeing here. In fact, I'm going to explain to you the significance and meaning of this particular chart. It's going to be fascinating because I'm going to explain to you how much higher the stock markets could go in the next several months going to 2025. All right, guys, let's dig into the charts. Join me. Alright guys, welcome back. So as the stock markets have reached 6,000, in just a few minutes I want to explain to you the significance and meaning of this chart and also this chart you're seeing here and what they potentially mean for the overall markets in the next several months going to 2025. Before we go into that, I just want to clear up and explain something quite important. Some people have been saying to me, hey Alessio, why did you get out of the market back in the summer? That means you're not in the market right now, right? Guys, as I'm sure you know, if you've been watching my previous videos, for example, back in September, I said this many times, that I actually got back into the market in August and September. I'll explain this in a few minutes, but let me just show you this. This is my unrealized profit and loss account. So these are open positions at the moment. For example, you can see here on the left, in the main account, I have an open position here, again, unrealized profit, of about 86,000 pounds in the stock market in the S&P. I also have a negative position. So for example, I have a losing position here in gilts or in bonds, essentially. That's about minus 3,400 pounds. But altogether, I have a net gain. I'm in a net gain of 85,900 pounds, which is approximately $110,000. And over here on the right-hand side, my second account, you can see I'm in a net gain of 26,678 pounds, which is approximately $34,000. So that's a net total gain of about $144,000. So I'm not out of the market. As I explained back in September, I got back into the market when the markets dropped. So first of all, you may remember my decision back in the summer to de-risk and essentially take profits. Essentially, I took the majority of my profits here. So as the market was rallying, I took the majority of my profits here in the early summer period. And as the market rallied further higher, I took more profits here and here as well. Now, was I a bit early? Yes, I was. But it doesn't matter because I saw a lot of risk in the markets and I explained to you what the risks were. And you can see what happened afterwards. The market then plummeted. Like one of the biggest drops we saw in the market this year, that was at the time of the Japanese stock market crash. It's funny how people have just forgot. Now let me say this. When the stock markets dropped here, the majority of people panicked and sold at the lows there, just before this bounce occurred. But as I explained, that drop actually was an opportunity to get back into the market. Let me show you why. In fact, I showed this to you some months ago. You see, when the stock markets dropped here, notice what happened here. As the stock markets dropped here, look at the RSI underneath. So first of all, the short-term setting of RSI, 7 setting, became oversold. And more importantly, the 13 setting of RSI, I use a 13 setting because it's a Fibonacci number. The 13 setting of RSI also became oversold. Okay, again, pointing to potential for a bounce. In fact, a bounce is what I was expecting, okay, which we got. Let me say this. I did not expect the bounce to be so strong. And by the way, because the bounce was so strong, that was when I changed my mind and became bullish again. And that's why I bought even more into the market. I got back into the market even more at this drop. And that was a drop, by the way, in early September after the RSI became oversold here. And by the way, you may remember I made a video at the time explaining that I'm getting back into the market and I was also bullish on the stock market. Here's a few clips. Also, I'm using the current drop in the stock market that's happening here to accumulate a bit more. So I'm adding to my position based on the most recent drop that is occurring here. It seems the green scenarios, the green bullish scenarios are probably much more likely. Again, the majority of the data seems to point for a continuation of the uptrend. So for me personally, I'm seeing this drop, this recent drop here in the stock market as a temporary retracement or pullback within a larger degree uptrend towards higher levels. That to me seems much more likely. And the C wave eventually in the next several months, taking us towards 5,800 to potentially even higher to 5,900. These two charts, again, the advanced decline line and the McClellan Summation Index, are two very powerful, important leading indicators for the stock markets that indicate we may potentially see significantly higher levels in the stock markets. Potentially we may reach 5,900 to 6,000 on the S&P. All right, guys, thank you for watching that. So as you saw back in September and October, I was bullish on the stock market. And the reason is, guys, I'm a position trader. As a position trader, I'm looking for opportunities and also risks. So when the risk is high for potential drop, like it was back in the summer, well, that is when a trader can choose to de-risk. In other words, reduce risk. And indeed, when the market drops, markets become oversold, especially in an uptrend. Again, oversold conditions in a strong uptrend as we can see here, those are potential opportunities. For example, when a trader can establish long positions again. And same again with this oversold condition here on the RSI, and same again more recently. In fact, let me show you this. This is the more recent drop that occurred in the stock market back in early November. And you can see, again, we have oversold conditions on the RSI. And here's what I said in the members video on the 3rd of November before the election. We have oversold conditions here on the RSI. So I think the odds are increasing for some kind of a strong bounce in the next few weeks or so. I'm saying this is a temporary correction here in the S&P. My higher probability is for another rally higher into the upper zones. Yeah, 6,000 and indeed much higher levels. Not just 6,000, but in the next several weeks and months, going to the end of this year into 6,114 and potentially even higher. So that to me is much more likely. All right, guys, welcome back. Thank you for watching that. So as you saw in the members video back on the 3rd of November, here's a screenshot. And you can see that I said at the time that I saw the drop as a temporary correction. A temporary correction, which by the way was an ABC correction, as we can see here. So a correction which then to be followed by another rally to much higher levels. In fact, the levels we've just reached recently at the 6,000 levels. And I think quite probably very soon we could reach the 6,118 levels and potentially higher as well. And by the way, guys, if you're not a member, I would highly suggest become a member and watch the member videos every week as well, because we go into a lot of detail with Elliott waves as well. Before I explain this chart and what it means for the stock market, let me just explain one more thing, which is that some people have been saying to me, hey Alessio, what about the video you made with Bob Prechter and the very bearish forecast for the next several years? Guys, as I explained in that video interview with Bob Prechter, by the way, let me say Bob Prechter is a guy who I really respect, and I think he's a great guy and a phenomenal analyst. My only point of difference, my only point of disagreement with Bob Prechter was his forecast for this year. So Bob Prechter's view was that he was expecting a top this year in 2024, and I disagreed with him respectfully. In fact, you can see this is a screenshot of my video. I took a screenshot because I want to show people this is actually what I said in the video. I said I am bullish for long term and expecting much higher levels above 6,000 on the S&P. And I also said in the same video, this is another screenshot, I said I do not expect a top this year, but probably in the next 1 to 2 years. In fact, I went out of my way to show you that the years I was expecting a top in the stock market was not this year, 2024, but actually 2025, 2026. And by the way, the next chart I want to show you in a few minutes will explain a bit more about this. So guys, I've been saying this over and over again in the last few months that I'm bullish on the stock market. I'm looking for much higher levels above 6,000. Now, let me just say this, that the RSI is showing we are a bit overbought here. In fact, you can see the 13 setting RSI is just about getting overbought. The short-term setting is already overbought, so there could be a pullback. I think quite likely in the next few weeks, we could see a pullback in the S&P, even if we see a rally further higher to 6,100. But let me show you this chart now. This is really fascinating. This chart is courtesy of Jason Geppert of Sentiment Trader. And what they explained was, by the way, they took this data back in October. So sometime in October, when the S&P was about 5,700, they mentioned that the S&P had not seen consecutive down days for over a month. So you can see over here, let's take a look at this. This is when the S&P, the stock market, sees consecutive down days. 1, 2, 3, 4. These are several consecutive down days in a cluster. But you can see what happened after that. For over a month, the S&P did not see any consecutive down days. Okay? So for example, look at these down days here in red. Okay? These were not consecutive. They were apart from one another. Compare that to this when you saw several consecutive down days in a clustering effect right about here. Now you're probably wondering, well, so what? What does that even mean? Well, guys, according to Jason Geppert, who I think is a phenomenal analyst, he says that whenever we see something like this, whenever the market, the S&P for example, goes through a period like a month with no consecutive down days like this, that is a very bullish sign for the stock market. In fact, he says that in the next 3 months, actually in the next 6 months, let's have a look at this. The next 6 months, the S&P could go up by about 4.3% with a high percentage positive or win rate. But look at this. 12 months later, I'll do this in green. 12 months later, the percentages are much higher. So for example, the median return 12 months later, in other words, a year later, is 14.5%. In other words, about 15%, with a very high percentage positive, a very high win rate, a win rate of about 88%. That means statistically, there's a very high probability of the market going up by another 10 to 15% in the next 12 months. Now, what that means is this. Let me just get my calculators. When this data was taken, the S&P was approximately 5,700, 5,800. Let's just do a conservative 5,700 here. And then let's add 14.5% median returns, okay? And what we get here is another 826 points in the S&P, which means what? Which means the S&P could go to 6,500 approximately in the next 12 months. So this is a long-term projection, a potential projection, by no means certain. So guys, let me just point this out. This is by no means guaranteed and by no means certain. We're dealing with probabilities here. And I realize you're intelligent and sophisticated people. I know you already understand this, but unfortunately, there's some very silly people out there who just don't get it. We're talking about probabilities. These are not certainties. The stock market does not have to go to 6,500, okay? It could go a bit higher than that. Actually, it could go lower than that. But all this data shows us is that there's a potential 88% probability, based on the data, that we could go somewhere close to 6,500 12 months from now, so by next year. So it's a very bullish data for the stock market. It does give us something to work with, okay? So even though we know the markets are chaotic, unpredictable, and uncertain, nevertheless, going with statistics, this shows us a high probability, again, an 88% probability of the market going to 6,500 in the next several months, probably by November 2025. Now, let me just say this. I'm remaining a bull on the stock market, even though we could see a pullback likely in the next several weeks. The bottom line is this, guys, that I always view the market in terms of risks and opportunities. So when the risk becomes high, that is when I choose to de-risk, okay? And when there's an opportunity, that is when I choose to go in the market. But we have to also remember that the markets can do anything they want to do. So just because the data is very bullish for the stock market, we also have to remember the markets are not linear. The markets are non-linear. So we must not expect the trend to continue forever, as some very silly people and ignorant people think that it will. Okay, so just because the markets have been an uptrend for a very long time, as we can see here, this does not mean that the trend will continue willy-nilly forever. In fact, as I've said previously, I think this uptrend in the stock market will probably come to an end in the next 1 to 2 years. If not 2025, then very likely in 2026. And again, I'm going to keep an open mind about the markets. And also, guys, for more detailed analysis with Elliott wave counts, join me in the member video. You can join and become a member using that link, and I'll see you guys in the next video update. Cheers, bye for now.